Here we are again with this week's episode of the Long Only Podcast. I'm Doug.
Hi, Doug.
Hi, Gerry. You're Gerry.
Hi, Doug.
I think we're on episode 85 right now. 85
We are 85 what?
episodes.
Oh, my goodness.
Yes. All right, we're going to skip the market commentary today because there's really not much new to say under the sun. As we were driving home from lunch, Gerry was berating me, giving my normal weekly dressing down, and said there was nothing new under the sun.
With self-loathing is just not going to work.
But anyway, what can we say? So let's not even say it. We're not going to talk about the F word. We're going to talk about something we haven't discussed, at least not since we've been to video, and it's been a while. Yeah. Don't say it.
Don't say it. Okay,
Don't say it. We're going to talk about crypto. We have a stake in crypto indirectly, not necessarily. Our use for it is a little broader, but Gerry can speak to that. And crypto's done pretty well lately, and I think that it's worth digging into and seeing separate hype versus fact with this asset class. And it seems like the government's plan has been to try to hope that it goes away. That hasn't worked, and I think that does seem to speak well for many of the coins that are still around. I feel good about the things that have survived this long. They're probably going to be around for a while longer.
It's very similar to what we said back in the .com era, where there was thousands of people that could barely fog a mirror, just had .com in their name and they were getting value. Is there will be a handful of winners in the end, and that's been the case. Amazon.com.
Yep.
And so similar things with the crypto world. I think what's happening is, the regulatory thing seems to have been sort of kicked down the road by the SEC. They've said, well, we're on to other things now, and crypto's going to have to wait. Well, crypto isn't waiting. In fact, the rest of the world, this isn't going to be a treatise on regulation of crypto, but the rest of the world seems to be moving on from a regulatory standpoint as far as they've addressed, they've addressed the issues. They've come up with some rules. I don't know that that's complete, but they have addressed it far better than the U.S. regulatory authorities. What is it? I mean, there may even be a turf war, I guess, going on between the CFTC, the Commodity Futures Trading Commission, and the SEC over, who actually should be regulating this. But that has to do with, well, is it a currency? Is it a security? We've long contended that there's aspects of all of the above, and then some. But I think what's happening now.
But Gerry, if I could just say something, is the resident non-crypto expert in the room?
I'm not I'm just observing.
Well, I'm less of one. So of course we're talking about it because two non-experts talking. But it seems to me that part of the problem with crypto is to try to put it in a box of something that already exists when it's its own thing.
That's exactly right. And I don't think what is a crypto expert? I mean, there's so many aspects of this, and we've always said the really important part of it is distributed computing, which is, blockchain, no centralized, depository for all of this stuff, if you will. Some of this terminology may not even be spot on correct in the way I'm using it, but it's close enough. I mean, it's distributed, it's not centralized. This is something that I think more and more the world is becoming enamored with, and just Bitcoin, which we've kind of gone back and forth on our views on Bitcoin over the years. I think in general, we're favorable or we're positive that it's happened because it's, in 2009, it opened the floodgates to this phenomenon. There's shortcomings, the lack of scalability, which ultimately, without getting into great detail, I think is ultimately the reason why it never will truly become money. Or from that matter, a store of value, although there are those and reasonable people will disagree on that. But with this extreme volatility and without the ability to have I guess what you say, a proper scaling mechanism, because contrary to what people who are on the side of sound money often believe, is you do still have to have the ability to increase purchasing media or currency when needed, when the growth of the economy is such that more money is needed. So proper scaling mechanism is necessary. What that actually is also debatable, but at least an attempt at it. And Bitcoin with its $21 million cap, which I think there are those that say in the year 2100, that's going to be, I guess that's the time. That's sort of the guess as to when we reach 20. I think it's like 18 something million now, but it's, because it's solving for prime numbers, it gets harder and harder and harder and harder to do that. So it slows the growth down. That non-inflationary aspect of it is the reason why it's doing well in this environment where fiat currencies like the US dollar and every other major foreign currency in the world have suffered versus Bitcoin.
Well, it's been my reductionist contention that the value in Bitcoin is not so much what it is. Well, a big part of Bitcoin's value or any digital currency is what it's not. And it's not a fiat currency.
It's not
and
a fiat currency.
Self-limiting gives it some value.
And it, it's not going away. It's going to be, it probably will go up in value in this, kind of desire to have this sort of Thompson novelty to some extent. And it did, but I don't want to be flippant about it to the extent that some do, which is, it's worthless. There is a value there. It's just, it didn't get it got part of the story right. It didn't get the story completely right. It's got part of the mechanism, not all of the mechanism. But I think what we're experiencing right now, and again, I'm going to emphasize, I don't think anybody's an expert. We've been watching this for over 10 years. I bought my first Bitcoin in 2013, I believe it was, and have been just impersonally, and I have been watching this phenomenon over these 10 plus years, and it's going to take another 10 years or so to get to where this is more ubiquitous and that we've got some of these scalability issues solved, but it's getting solved. And I think to a large extent in the last few years, there's been somewhat of a separation of the men from the boys, so to speak. Can you say that still? I don't know. I was about to catch myself on that. I said it.
I won't edit it out. We may confuse some listeners, but
yeah. And so point being is that some real use cases, I think Ethereum, which is commonly called a level two token, which was a platform for developing blockchains, and using the Ethereum blockchain. And now there's other Solana, Cardano, they're coming up with even more value in some cases, or at least more features to them than even the Ethereum platform or the Ethereum blockchain has. Ethereum is still very widely used, and it will continue to be, I think.